You might think this headline is an exaggeration, but no. A 20-year-old genuinely made over $100 million in one single trade, and this happened in a period of little over just a month. Today we're going to dive into this trade, unpack how it happened, and also speak about everything that's been playing out in the BBBY as well as the meme stock space. If you're not familiar, many of these meme stocks have started rising off the bottoms that we've seen over the past period of time. But Bed Bath & Beyond has had a meteoric rise, up by over 400%. So today we're diving into the short squeeze behind BBBY and of course this $110 million trade that's attracted everyone's attention. So first up, you might be wondering, who is BBBY? Bed Bath & Beyond, I'm sure it's a home retail name that you're familiar with. Most people are familiar with the company itself, but of course, it's been going through difficulties like many retail stores have over this past period. As you can see here, on total comp sales, down by over 20%. However, there have been some concerns surrounding liquidity. They've got a high debt burden. Cash and cash equivalents were quite an area of attention over the past report. And they've also had some executive leadership changes as well, with Sue Gove recently taking the position as interim CEO. So of course, when you understand where the current market's positioned, there's still questions about what's going to happen to consumer spending with the macroeconomic uncertainties too. It positions things in quite an uncertain area. And so that leads us to the BBBY Short Squeeze. The first question that many people might be having is, are the meme stocks back? We all know what happened with Gamestop, AMC, BBBY was actually one that got caught up with all of those last year in early 2021. But if you haven't been following and paying attention, many of these names are up and up quite significantly over the past 4 to 6 weeks. However, BBBY has really been holding that for quite a high lead. And one of the reasons for that is, firstly, it's got a thin float, around 70 to 80 million shares available, 40+% of shares short at the peak, which of course is a significant amount of shorts. And as we know, the fervor that can be drummed up on areas such as Reddit, Discord, and the online social media world means that a lot of these short squeezes have the ability to pick up velocity relatively quickly. And BBBY, due to some of the aforementioned reasons, has actually missed expectations 4 quarters in a row. So as a result of those underlying conditions, along with one other factor catalyzing this, which is Ryan Cohen, you might be wondering why there's a photo of him in the top corner, which we'll talk about. This has led to a short squeeze that's seen BBBY's share price up by over 400+% over the past month. I'd love to know your thoughts. Drop in a comment below. What have you made of everything that's played out over this past period? What are you watching? And a reminder, we've just dropped our second channel where we talk about all things markets and economics. So if you haven't yet, head over and subscribe to the For Investors channel, link up above. So let's talk about Ryan Cohen. He is the billionaire founder of Chewy. I'm sure you'll be familiar with that space, but really he drove to attention after buying a 10% stake in Gamestop and joining the company's board in January 2021. He positions himself as an activist investor. Of course, he helped to really catalyze and trigger a lot of the excitement surrounding Gamestop and consequently the AMC excitement as well that flew out of that. But Ryan Cohen earlier this year purchased stock and options representing over 9 million shares of BBBY. He took over 11% ownership of the company. He was the largest shareholder of Bed Bath & Beyond. And really his ownership stake, particularly because of his propensity to be an activist investor, catalyzed a lot of the retail excitement surrounding Bed Bath & Beyond. And that then flows us onto Jake Freeman. Who is he? How is a 20-year-old college student from New Jersey? He's currently studying mathematics and economics at the University of Southern California. How did he make $110 million? Now, what's worth noting initially is he bought more than 5 million shares in Bed Bath & Beyond. This happened only in July, so it's happened in a little over a month to turn over $100 million plus profit. Not a bad month's work. But it is worth noting that he initially raised $25 million from friends and family. Of course, not many people can just call up the phone, bring up maybe a couple of mates and call some of the family and get $20 million plus available. So obviously had a bit of an advantage there. But with a 4x plus that we've talked about in the Bed Bath & Beyond share price, that's obviously led to the $110 million uplift. He placed it all on Bed Bath & Beyond. Probably not conventional wisdom to state you should be putting all of this fund into a meme stock, but he did it. He became the second largest non-institutional investor in the company after Ryan Cohen. So not a bad slice of the pie, over a 6% passive stake there. However, he did sell over $130 million worth of stock on Tuesday. So it happened very quickly. He's turned it over rapidly. Fair quote, he did not expect the price to soar as it did. Of course, not many people would. He did expect that as BBBY better structured its balance sheet for value to be unlocked, he felt at those elevated levels, however, that BBBY was not worth it anymore from a risk and reward standpoint. So we sold over $130 million, as mentioned, $25 million initial stake there. And what was fascinating, after trading closed on the day that Freeman sold his shares, regulatory filing from Cohen's VC firm RC Ventures revealed plans to sell their entire 11% stake. And upon confirmation of this, we actually saw Bed Bath & Beyond, the BBBY share price down by over 40% at the time of this recording. It's been a rapid fall from grace. Of course, there's always lessons to be learned. History doesn't repeat, but it often rhymes. Not every situation's the same. It's always context dependent. However, we can take some learnings from each situation. I think first and foremost, we saw it last year with many of those bullish tendencies in some of the key pockets. The meme stocks were one area. You don't want to be chasing the hype. Irrational exuberance will eventually unwind. There's also an insight into market psychology and the fact that markets are not perfectly rational. We've seen this time and time again, particularly over the past couple of years, but it's a reminder of that. And now, of course, no one can, without being able to just pick that phone up, but should realistically be YOLOing 100% of a fund into meme stocks. But we can kind of take an insight away from it that conviction is always important. Jake Freeman had that conviction. He was successful. Of course, it's not a conventional way to do that, and you can't really go for a one-for-one on it. But it was fascinating to see his conviction and how rapidly it did pay off. I'd love to know your thoughts. Drop in a comment below. Subscribe, hit that like button. Check out another video after this one. Links up above. Big thanks for joining us. For now, stay well and happy investing.